Good evening, all. It's Sunday night. This is Shay Horowitz, ShogunTrading.com. This is our free weekly newsletter. The market has been very frustrating over the last few weeks. If you look at all of February, basically, the market has been going absolutely sideways. This is February. This is the S&P 500 chart of the S&P 500 on an hourly basis, and you can see we've been going back and forth, back and forth, back and forth quite a bit, without really gaining anywhere, without really any large trends. We're 3 weeks into February. This is something that's frustrating, of course, to traders, because without momentum, without the basic ingredient of a trade, the basic ingredient of a trend is of course, momentum. Is a trend. It's very hard to be a trend trader. But is this normal? Is this something new? It really isn't. It's something completely normal. If you look at the S&P 500, for example, we had a consolidation over here as well, and then we went for a very, very nice long-term trend. We went from 1450 down below 1300. I think we went all the way down to 1270. So we had quite a bit of a move after a consolidation. And that's exactly what's going on right now. Move, and then noise, consolidation, and after consolidation, we're going to get another move. We're going to get another trend. That's the basic stages of a trend, basic stages of a market. Trend, then noise, then consolidation, then a trend again. The patient trader makes the most amount of money. The patient trader is the one that's the most successful. Why? Because they wait for the right opportunity to trade. They vary the size of their trades. They vary their aggressiveness based on what the market is doing. If the market is in a trend, they're very aggressive. They accumulate position, they accumulate a large position, and they take full advantage of a nice move down. But if the market is not doing that, if the market is just consolidating, they stay away. Why? Because the risk-reward ratio of your trades becomes almost negative. You have a very high likelihood of getting stopped out and very low likelihood of making a lot of money on a trade because the market itself is not moving. The main ingredient in your trade is not there. Guys, you remember that our philosophy is that 60% of a market move, 60% of your trade is the market, 25% of your trade is the sector, and only 15% of any trade that you're taking is the stock itself. If the 60% of the market power itself is not there, the other 25 and 15% are almost negligible. That's why we have to wait for the market itself to take off. When is it going to take off? I don't know. We are at the end of a consolidation right now. We're right at the edge. We're right at the spearhead of a wedge. There's your wedge. I think we're going to break out this week. Which way? I don't know. And I'm very comfortable with saying I don't know because that's what trading is all about. I'm going to follow the market. Whatever the market tells me, I'm not going to argue. I'm not going to pretend that I'm smarter than the market. I want to just follow the market. So what I do is I place a support level, which is 1338, and a resistance level, which is 1365, and I watch them. And whenever the market breaks them, is when I'm going to go into the market. Now, the market did break the support line on Friday. Let me show you Friday, and you can see that this is a 5-minute chart just to show you what happened during the day. And we broke it, and we drifted down, and everything looked great, and we came down, and we broke more support levels, and it looked like we were really going for a downtrend. And then, of course, we got hit with news that AMBAC, one of the bond insurers, is probably going to get rescued. And that rumor is not confirmed. Nobody knows a whole lot about it. Who's going to rescue them? It looks like it's going to be the three largest banks, Bank of America, Citibank, Wachovia. Could be the Feds. I don't know, and nobody knows, and there's not a whole lot of information about it yet. I'm not a news guy by any means. I'm a technical analyst, and I don't really pay attention to that. What I really pay attention to is the fact that we broke support at 1338. We went down. The trade was working great. And then the news, which happens a lot on a Friday afternoon, and that's the reason why I don't trade Friday afternoons. And then the market bounced straight up. Now, I'm looking at the futures right now as we speak. and they're not really moving. The S&P futures are up 550, and the Nasdaq 100 futures are up 4. That's not significant. That's not a huge gap. That's not a huge move that you would expect with such a rally on Friday. I think people are a little apprehensive about it, and people are they want to see how the market is going to react to it. If the Friday rally was significant, and the reason why people doubt Friday rallies or Friday anything is because the volume is so low. Volume on Fridays is extremely low compared to every other day, and especially Friday afternoons. People take off. People are not watching their positions anymore. People are closing all their positions and taking off for the weekend, and that's why even a small amount of news can really rattle the market because most participants are not there. Low volume. It takes very few